and invite our business correspondent, Alin Wiratmaja. So, Alin, should not or should we buy gold right now for our investment? What's your take on it?
Well, we can see the long-term prospect for gold, which is still bullish, Akhir, but let's take a look deeper on this. So, as we can see from the chart on Monday, 7th of March, gold prices climbed above the psychological level of 2000 US dollar per troy ounce. Investors that worry about the Ukraine and Russia crisis and oil market disruptions rush to safe haven assets like gold. If you remember, the last time gold consistently traded above $2,000 a troy ounce, Akir, was in August 2020 when COVID-19 muddied the global economic outlook, as we can see from the chart. However, on Wednesday, 9th of March, as we speak right now, on Thursday, if I can see the latest figure, gold is traded at $1,982 a troy ounce. It is below 2,000 US dollars a troy ounce and fell from a 19-month high hit in the previous session, as you mentioned, Akir, as some investors may be selling gold to raise cash to buy undervalued stocks, offsetting gold safe haven appeal at least for the time being, Akir. Risk sentiment in the global markets improved despite ongoing concerns around Russia-Ukraine military conflict. In Indonesia, we can see Antam gold prices fell 26,000 rupiah a gram. We can see the figure here to 1,010,000 rupiah per gram as gold prices fell below $2,000 per troy ounce. And despite the latest setback, bullion is still up 9% on the year as investors seek a hedge against the threat of an inflationary shock to the global economy. Aker holdings in gold-backed exchange-traded funds (ETFs) have reached the highest since March 2021 with inflows of about 152 tons this year. The impact of sanctions on Russia have reverberated across the globe, driving commodities higher on supply move. The latest move by the US ban to Russian oil has stoked further fears of stagflation, where prices rise while the economy growth stutters. This is dangerous. So, can gold add sparkle to your portfolio, just like your question, Akir? While a pullback to near $1,930 a troy ounce is likely, the long term outlook remains positive for gold. We know that earlier in January, Goldman Sachs had raised their 12-month gold price forecast to $2,150 per troy ounce on the view that an impending U.S. growth slowdown would lead to increased concerns of a U.S. recession and incentivize 300 tons of inflows into gold ETFs. At the beginning of the Russia-Ukraine tensions, Goldman Sachs that had suggested that the resulting rally in commodities could further deteriorate the developed market growth inflation mix, increased concerns of a US recession, and push gold ETFs inflows to 600 tons and may push the gold prices to $2,350 a troy ounce in 12 months. This scenario is believed now becoming the base case. So it's still bullish in the long term for gold, I care.
So maybe for the resume, you can re-emphasize again, should not or should we buy gold for now for our investment for this
Well, if
term?
you have a long-term view, like for example, if you used to all this time, you used to have a habit of buying gold, of course you can still add some, you know, gold more to your portfolio because the long-term view is still very bullish. The Goldman Sachs predict it may go to as high as $2,350 in 12 months.
Right, in 12 months. So it means it's still available for the one next year ahead, yeah? Thank you, Alin Wiratmaja, for
Yeah, I
your...
still have like upside potential. I care. Thank you.
Yes, thank you. Thank you very much, Alin Wiratmaja, for your elaboration on the issue of gold prices.